Welcome back at 6:12 on this Tuesday morning. Let's talk about your money.
Well, you might have seen this last night. The fear started spreading, and today it hit in a big way. Investors are rattled after one of the biggest one-day point drops in Wall Street history.
Recession fears are front and center, and markets around the world are falling after a rough week for the U.S. economy.
Imagine waking up one morning to find your life savings cut in half. That's the reality for millions of investors as we witness one of the most dramatic stock market crashes in recent history. But what's really going on behind the scenes? Is this the end of the bull market or just another bump in the road? The recent stock market crash can be traced back to a series of economic indicators and global events that culminated in a dramatic downturn. The initial trigger was a report indicating that U.S. manufacturing had declined for 4 consecutive months. This data raised alarms about a potential economic contraction, leading investors to fear an impending recession. The first domino to fall was the tech sector. Companies that had been darlings of Wall Street suddenly found themselves under intense scrutiny. Their sky-high valuations, once justified by promises of future growth, began to look shaky in the face of rising interest rates and a potential recession.
From the opening bell, stocks plummeted, led lower by big tech companies like Nvidia and Apple, which had soared for months on AI-related hype. Nearly $2 trillion in equity losses today, spurred by recession fears and overseas market sell-offs.
Nvidia, a chip maker that had been riding high on the AI boom, saw its stock price plummet by 25% in a single day. Apple, long considered a safe haven for investors, wasn't spared either, dropping 15% and dragging the entire market down with it. As panic set in, investors began selling indiscriminately, triggering a cascade of automated sell orders from algorithmic trading systems. This computer-driven selling frenzy exacerbated the crash, pushing prices down further and faster than anyone had anticipated. The stock market crash quickly spread to the cryptocurrency market. Bitcoin, which many had touted as a hedge against traditional market volatility, proved to be just as vulnerable.
Crypto markets getting hit with a steep sell-off to kickstart the week, following a sharp drop in financial markets around the globe.
Its price plummeted by 30% in 24 hours, wiping out billions in value and shattering the dreams of crypto millionaires overnight. This crypto crash had a knock-on effect, as many tech companies and institutional investors had significant exposure to digital assets. The lines between traditional finance and the crypto world had blurred, and now both were caught in the same downward spiral. As the US markets tumbled, the shockwaves were felt around the world. European and Asian markets followed suit, with major indices in London, Frankfurt, and Tokyo all posting double-digit losses.
So we woke up this morning in the United States and looked across the world to see markets internationally in freefall. In Japan, the biggest sell-off in about 40 years, similar sort of pictures in Europe.
Emerging markets were hit particularly hard. Countries that had borrowed heavily in dollars found themselves struggling to repay their debts as the US currency strengthened amid the chaos. This raised fears of a potential sovereign debt crisis, further spooking investors. But amidst the doom and gloom, some investors found themselves well positioned to profit from the crash. It was a rare opportunity to buy quality stocks at significantly reduced prices. With companies trading at a fraction of their previous valuations, these investors saw a chance to build or strengthen their portfolios for future growth. As the dust begins to settle, there are questions about the long-term implications of this crash. Will it lead to a prolonged recession, or will the markets bounce back as they have so many times before? Only time will tell. Now, if you're interested in understanding how markets have crashed during similar crises of the past, check out our video on the dot-com bubble and see how history might offer insights into our current situation. Don't miss it. Click here to watch now.